Welcome, my friend. This is A Time to Care, the Caregivers Podcast. I'm Isabel Melgarejo, your host. And today I have with me Kristy Osborne. She is a reverse mortgage officer. And I think, she also makes mortgages happen the traditional way. She was a former realtor and escrow officer, so she knows everything about buying a home. And she loved helping people making one of the biggest decisions in our lives, like where are we going to live and build a family and build a home. And today, one of the things that I really like about her is that she is about making this process of getting a mortgage or a reverse mortgage something personal, and it's not just like, here is the bunch of documents that you have to fill out. So she really goes with passion and care to help you get exactly what you want out of these, for me, very complex and very scary things in life. And if you see her outside of work, she loves laughing with her sisters. She loves playing pickleball. For all of you playing pickleball, you have someone new to play with. Welcome, Kristy.
Thank you. You do have someone new to play with. I'm always up for a game of pickleball. My favorite thing to do right now. See, my coworker got me this little pickleball necklace for Christmas and my birthdays.
That's so cute.
Thanks.
So I think we all know what a mortgage is, but tell us a little bit more about how you approach it and why is it so scary for, I don't know if for everybody, but at least for me, it is very scary to go through this process of
It's funny that you say that because I feel like even those of us who work in the industry, we are normal human beings as well. So even when we go through our own personal mortgage, we feel the consumer pressure of the process. So it is a huge deal when you're talking about someone's home. And I think that's why it's so overwhelming for people, because it is, for a lot of people, the largest financial decision that they will make in their life. So it amounts to the most money they're spending on one particular item.
Yeah, and you're getting into debt for a very long time.
Yeah, for sure. And then I think for the reverse mortgage product, the scary thing is there's so many misunderstood parts of that product that I think people are listening to what they see out on the web, what they hear from people who have never done that product, what they're hearing from people who really don't understand the product. I'm on a Facebook group that's all reverse mortgage all over the country. And some of the questions and then the answers that I see on that page, people could not be more wrong. So you have a lot of people who think they know, they're not a lender, and they're answering questions. And I think that too kind of stirs that scary mentality of, oh my gosh, this is something we should never do. Where in reality, it's something that can help so many people. And it's just devastating to me when I see someone who would better their life by doing this and they don't because of fear.
So what are some of these top 5 myths? Let's debunk them.
Okay. So the very top myth is, I don't want the bank to own my home. I still want to own my home. And the reality is you do still own your own home. You simply have a mortgage on your property. It's a mortgage just like any other mortgage, just happens to defer payments to a later date. So that's an option that people can, and that's why people utilize the product. That's probably the number one myth that I see. The second is, I don't want to leave my children or my heirs with huge debt if I've got this, mortgage and I'm not making a payment on it and there's interest accruing on this loan. Well, at some point I might be leaving my kids with a debt. Well, it's a non-recourse product. The house itself actually guarantees that loan. So you're not going to leave yourself or your heirs with any type of upside down situation. The next myth is I'm going to get foreclosed on. I'm going to lose my house. When reverse mortgages first came out, the first reverse mortgage was actually done in 1961. And so they've been around for a very long time, and the product has changed tremendously. So there was a Wells Fargo headline, and I think this might have been in the 70s, widow loses home to reverse mortgage. And there were a lot of headlines like that, when in reality, someone is going to lose their home if they don't pay their property taxes. And that was the situation in that particular case, is that they had to pay their property taxes. It wasn't because they had a reverse mortgage loan. It was because they didn't pay their taxes, which is a requirement. You do have to keep your taxes and your insurance paid. Those are probably the biggest myths. The other is, I have limited income, or I'm going to have to pay more taxes. This is not income. This is a loan. So if people are using this to pull money out of their equity for a living, it's not income, because it's just like you're borrowing, albeit from yourself in your home equity. It is a loan. It's not income.
So does it help with taxes on the other side?
Well, it can. So not a CPA, can't give tax advice, but I will tell you that there are folks who will set this up and will use it in that capacity. So if you choose to make payments, which you 100% can choose to do, you will get a 1098. And currently, with our current tax law, that 1098 is going to have some things that you can write off on your IRS taxes. And so what some people will choose to do is build that up, and maybe they'll make a lump sum payment every 3 or 4 years. And in that third or fourth year, get a large 1098 for interest paid on that loan, and use that in that tax planning longevity. So depends on the person's tax situation. Our individual deductibles right now, the standard deductibles are really pretty high. So I think fewer people are itemizing, which is why you'd want a large amount for the year that you do it, so that would be the year that you would itemize.
Okay. Yeah, that's what I heard from talking with a tax expert too. And I did it this year. Let's see how that goes. I paid my taxes like twice a year.
Yes.
And then he recommended that for the next year, you give like a really big sum of money to a charity.
Yes.
Well, whatever big sum for whomever. But what he said, if you pay your home taxes like in January for the previous year and then in December for the current year, like that helps a lot with taxes. I don't know if it's true. I'm not a tax expert. I'm just going to learn about that this year. If it helps or not.
I know enough to be dangerous. So I always tell people, this is my personal opinion. I'm not a tax expert. I just know enough to say, hey, this might work for you. But I always tell my clients, especially if they're higher net worth clients and where they really do need those deductibles, they typically have a CPA. If they don't, they need to get one.
Yes. Okay. So we jump into the myths, but what is a reverse mortgage? Because I know, but I don't know if everybody listening to us know what it is.
Yeah. No, I think that's a great place to start, because not everybody really does fully understand. So when you think about this mortgage product, you have reverse at the top. And then under that, you have the FHA product, which is the government insured product. And then you have privately insured products. Okay. So a lot of people don't even understand that basic setup of the reverse. They just think all reverses are lumped together. The FHA product, which is called a home equity conversion mortgage, is the most widely used product. Probably 95% of people who put a reverse mortgage in place in the United States are using that HECM product. And in its basic sense, a reverse mortgage is simply a mortgage where the principal and interest payments are deferred to a later date. That really is the basic sense. Do you have to be of a certain age to use it? Every state is a little different. We are in Texas. You have to be 62 plus years of age in Texas, and you have to have, if you're married, you both have to be over 62. Now, for the HECM product, that's true across the board, except for in other states, not Texas. If your spouse is not yet 62 and one of you is, you can do some different structuring of that loan, and you are allowed to still get that product. Texas is just a little different. And then there are some other proprietary products, those private products, where you can be 50, 55, just not in Texas.
Okay. Well, people hear us from all over the world, and they also hear like people in France and Pakistan and Korea and I don't know where else they hear us from. So if you're in one of those countries, you might want to research if that product exists there.
I know that the product exists in the UK, and there are probably other countries where it does exist. So yes, if you are in another country, chances are there's something similar. And I would probably look for senior financing, reverse financing, deferred payment financing, that kind of thing.
So how do you start looking for, like, obviously you have a need for money because otherwise you wouldn't be going through a reverse mortgage. So where do you
Actually, that is a myth.
Okay.
So I'm glad that you said that, because that should have been one of the myths that I said, because that is also a very common myth. So let's talk about why someone might use this product. Definitely need-based. And we do talk to a lot of people who are in the situation like you were starting to talk about, where they need to add either some monthly budget income, or they need to eliminate some of their expenses, or they need to have access to a savings for emergency funds. All need-based, all great reasons why someone might want to tap into their home equity. There are also, though, situations where people want to put this product in place to enhance their retirement. And so that might be, this is for luxuries in retirement, or it might be a buffer asset because they have things that are in the market that are not liquid. And while they pull from those, they want some flexibility. They want to be able to pull from their home equity when the market is down and not tap into those things that are invested when the market is down. So that's more of a planning strategy. And that might be another reason why someone puts a product like this in place. Another reason is they have a better use for the money. They may be able to make more with their money somewhere else. And so, we have people who look at it for that purpose. So broad spectrum of why someone might want to get a reverse mortgage, and it's not always needs based, but sometimes it is.
So how do you start looking for these products? What are some good questions to ask yourself or an officer like you?
Yeah.
What should people be asking you?
Yeah, um the biggest thing is, where does it fit for me personally? That's what I think people need to be asking. Where would it enhance my retirement, enhance my lifestyle, alleviate some stress? How much can I get is an important question. If, you do have to have substantial equity in your home because of the way the product is designed. It's designed for you to not have to make a principal and interest payment. So there's interest accruing on this mortgage. So you're going to start out relatively low based on the value of your home, so that there's this room for this accrual. So how much can I get? What might be the use of that product in my life? I think people need to be open to the possibilities of what it can do for them.
So what are some of those possibilities? Because I always tell people and tell my clients to get a broad spectrum of solutions, and sometimes we just focus on like the solution. Like, and as I said, like, yeah, you need money, you will get a loan or a mortgage or whatever. And you just corrected me. Like, no, like you can use this for other purposes. So what can you do with this money? What are things that you can just use?
Okay. So I think the easiest is to walk you through some examples of some things that I have seen clients use this money for. And I think, in fact, it's funny because I will have a lot of people when they're talking to me say, what do most people call you about when they want to do this? And I'm like, it's a broad spectrum. There's not one thing that people might be looking for. I had a lady who owned her home free and clear. She was widowed. Her husband had been gone about 5 years. He was sick prior to passing. And so they had gone through some of their finances with medical situations. They had a second home in Florida that they had had to sell. So she was down to really minimal living. She had a ton of equity in the house, but she didn't have a lot of cash flow. And when I spoke with her, she said, I am so tired of looking at these four walls. I can't afford to do anything. I have family in Ohio. I have friends in Florida that I haven't seen in forever. I just want to live my life. Uh, she was, I think, one. And Isabel, she was still mowing her own lawn because she couldn't afford lawn service. Like, that's how tight her budget was. So for her, we put in place on her free and clear home access to a line of credit from her equity. And from that line of credit, she can draw those funds down when she needs them to go to Ohio to see her family, to travel to Florida to see her friends, to hire a lawn service so that she doesn't have to be out there in the Texas heat mowing her lawn. So that's one example of a, to me, enhancement of her lifestyle. She was doing okay, definitely not living, high on the hog, but she was doing okay. But she wanted to do better than that. I have another client who put the reverse mortgage in place and paid it off almost down to a minimal balance and is letting it sit until she's ready to retire from work. And so what happens when you put the line of credit in place, one of the most powerful features of this HECM product is there's a growth rate associated with the borrowing power on the line of credit. So she's got this initial balance, and let's just say it's $100,000. And over time, every single month at the same rate as the interest on her loan, it's the borrowing power is increasing. And so I tell people it's like they give you a credit card and they start you out with $1,000 credit limit. And they say, oh, Isabel, you're doing such a good job. We're going to bump you up to 3,000. Oh, you're doing so great. We're going to bump you up to 5. Same concept, except it's not based on anything other than what that interest is, and it's growing. So when she retires, she now will have her retirement, and she'll also have this buffer asset of funds available to her should she need a new roof, should she need a new car. Maybe she never needs it, but the peace of mind of having it there and in place is invaluable. And, people plan, maybe you've planned your retirement to a certain age. And then after that certain age, well, you don't have any more funds. This is a great stopgap measure for when that might happen. And I had a client just like that. He was turning 91 on his birthday in the next January of the year we put his loan in place. And he actually came to us to see about doing a traditional loan and get his money out. He was going to go to the bank and get a CD and see if he could get some monthly income off of the CD. And I was like, you could do that. Or have you ever heard of a reverse mortgage? And he was like, no, tell me about it. And so his annuity that was running out in January on his birthday was, I think, $916 a month. And he told me, he said, Kristy, my dad passed at 92. My uncle passed at 91. I didn't think I'd live this long. And he was just healthy as could be, long life ahead of him. And he's like, but my money's running out because I only plan till this certain age. So he put that in place. And instead of having that line of credit, he's just going to have a monthly deposit to him. And that's another way that you can set this up, is to just receive a certain amount of funds every single month. And so that's the way we set it up for him. And it was like nothing changed for him. His income was staying the same, even though that annuity had run out. So his house kind of replaced it and became that annuity.
So once Because I know a lot of people, like, you're going to leave debt. So what happens when you pass, or how do you finish this reverse mortgage?
Yeah.
Or you get tired of it? I don't
Yeah,
know.
yeah. I actually have a whole class on that because it is a big deal. And it is a concern that people have. So, what happens at the end of a reverse mortgage? Here's what's going to be the situation. Either one, your heirs want to keep the house, or two, they're going to sell the house. Same could be for you. Either you're going to sell the house or you're going to keep the house. If a maturity event happens, and a maturity event is either they turn 150, which I've not had a client do yet,
We
or
don't know if that's going to happen soon.
or they move out of the property as their primary residence. And if they're married, both would have to move out of the property, or they pass away, and both of them again would have to pass away. When that happens, we call that a maturity event. And so at that point, something has to happen with the reverse mortgage. It can't stay in place. So we have to divest of it. Well, you can divest of it by paying it off if you have the cash money, selling the house and paying it off like you would a traditional mortgage payment, payoff, or refinancing that loan. Okay. And so they're going to have 6 months to decide what it is that they want to do. And they can get 2 extensions to that where really they're going to have a year. While the line of credit closes, nothing else changes. They don't have to start making a payment. They don't have to worry about, that burden. They just have to figure out, are we going to refinance or are we going to pay off the loan some other way? So if they want to sell, that's pretty easy. You put it on the market, you sell it. If there's equity in the home, that goes to the estate. It belongs to them. It's just simply a payoff on the mortgage. If the mortgage has exceeded the value of the property, well, they can either turn it back over to the bank if they want, or they can sell, and they only have to pay off 95% of the appraised value of the property. So they're not going to have to pay off more than what the property is worth. The property itself, that non-recourse feature that I talked about, kicks in, and the property itself is going to satisfy the loan. So if they, want to do it that way, they want to refinance, they can do the same thing. They can refinance for 95% of the current appraised value, or they can refinance for the loan, whichever's lower. So there's lots of options for heirs. And because it is complicated, I do tell my clients, put my card with your estate papers and be sure your adult children or your executor or your estate people call me.
I think we should have those cards for a lot of people that support us in life, like our financial advisor, the mortgage, our estate lawyer. Like, we need to put important people in our lives that do services for us like this, and preferably give them a copy of those documents. Like, hey, here is a copy of the card of Kristy and whomever else is there, just as like good practice. Like, hey, I don't want to leave you a mess, so here it is, the whole package.
Yeah. There's so much going on when that happens that you have to take care of, that having somebody who can just, okay, I have a question on this. Oh, well, they left me Kristy's card. Oh, I have a question on this. Oh, they left me, Mr. Attorney's card or whatever. So yeah, for sure.
Yeah, I think that is a good practice for everything.
Yeah.
Because when I went through my dad's passing, it was like, where do we start?
Right.
Yeah,
Hard.
it was what like I'm writing a book and I'm telling this story about closing his business. I was 21 and I just I grabbed his phone, look at his calendar, because even though it was for like a long time ago, but calendars in phones were a thing, and he was a very techy person. So fortunately, he was very organized, and so I grabbed his phone, went through all of his contacts and all of his schedule, like who you're meeting, who you're talking with, everything that was scheduled, and I started calling people. And he was like, hey, I'm letting you know that I don't know what you were working with my dad, but that's over because he passed. And
Wow.
everybody was like so out of the blue.
Yeah. Wow.
That was blunt of me, but it would have been better if there was some kind of guidance of like, hey, you talk with this person and this person will know what to do next.
Yeah. Yeah. We don't think about that death can happen at any time to anyone at any age. It's not just an old person thing, and you got to be prepared. That's the one thing you can do for your loved ones is be prepared.
Yes, I agree. Is there anything else you want to share about reverse mortgage or traditional mortgages or anything like that?
I think just with the reverse mortgage, I would just tell people don't be scared to have a conversation. Having a conversation doesn't obligate you to anything, but I
Hmm.
always say, and this is for my traditional mortgages and this is for my reverse mortgage clients, an informed consumer is a better consumer. And so educate yourself by talking to someone who knows. Be careful about getting your advice off of TikTok or, Facebook or these groups where you don't know who's answering you. You don't know their credentials. So be sure you talk to someone who understands that product and that you feel good about, that you trust. That's a big thing is work with people that you trust.
Yeah, yeah. I agree with you. So, where can people find you, connect with you, learn more about you, the work you do, all your awesomeness?
Well, I appreciate the awesomeness comment, but I'm easy to find. My website is my first and last name. So it's just KristyOsborne.com. I'm also on YouTube where I do have an educational channel, and that's Kristy Osborne Home Wealth Advisor.
Perfect. We're going to make sure to share all your links. And thank you so much for coming.
Yeah, absolutely. Thank you for having me.
Hey, just for you to know, the content presented in this podcast is for informational and educational purposes only. The views and opinions expressed by the hosts and guests are their own and do not necessarily reflect the official policy or position of any affiliated organizations or sponsors. If you need additional advice, please contact the right partner for you.